constraints revealed by the pandemic are likely to be with us for some time, perpetuating imbalances, contributing to inflation, and likely requiring a sustained policy response.
I support continued increases in the FOMC's policy rate, and based on what I know as of today, I support a significant increase at our next meeting on September 20th and 21st.
I shall strive to follow the inspiring example I have been set in upholding constitutional government and to seek the peace, harmony and prosperity of the peoples of these islands and of the Commonwealth realms and territories throughout the world.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Rapid advances. Ukraine's forces make swift gains in the Kharkiv region as Russian defenses crumble. Dollar weakens, stocks rise. The euro surges as a Bundesbank voices support for more ECB hikes. Plus, Charles III, the new UK monarch, is officially proclaimed king as the late Queen Elizabeth's state funeral is set for September 19th. Now, first of all, let's check on the markets. We have a lot to get through. Of course, the UK largely in focus. It's a very different week, certainly in tone, but also in economy. This is because of the morning, of course, of Queen Elizabeth II. We look at, for example, the Bank of England. They postponed their decision. It's no longer this Thursday, but they postponed it by a week. Now, the big story today, with European stocks gaining some 0.6%, is also euro dollar 1.0179. This is after we heard from the Bundesbank president, Mr. Nagel, saying that he's expecting the ECB to do a lot more. So it does seem that the ECB could actually follow the footsteps of the Fed. The dollar index 1,290, and then S&P futures also gaining 0.6%, 0.3% rather. The European map, and this is a huge difference between what we're seeing in Germany and, for example, here in the UK. Again, the UK, we look at sterling. The DAX actually gaining some 1.3%. I think out of the 19 industry groups making up the Stock 600, all of them are gaining. Now, Ukraine's forces are continuing a rapid advance in the Kharkiv region, exploiting an extraordinary collapse of Russian defenses that threatens to derail the Kremlin's bid to cement control of Ukraine's east. Now, for more, we're joined by Bloomberg's Europe correspondent Maria Tadeusz. Maria, update us exactly with the latest development.
Well, Francine, this was a very quick advance over the weekend. On Saturday, of course, Ukrainian officials, the Ukrainian army, confirming that they had been able to push back Russian forces from Kharkiv. The Ukrainian president says that more than 2,000 square kilometers have been, quote, liberated from occupied territories since the start of September. And I think what we're seeing right now in real life is that counteroffensive, that counterattack that Ukraine promised for weeks finally taken shape in real life. I think the big question, though, however, going forward is what does it mean for the war? What will Russia do going forward? But also particularly, how will this change the approach that Vladimir Putin has had until now? Remember, he still talks about a special operation to liberate the people of the Donbass. He doesn't use the word war. That would entail potentially conscription, and that has a lot of ramifications for Russian society. So that is really the focus now going forward.
So, Maria, has there been any progress actually from the EU on reducing its dependency on Russian gas?
Well, Francine, we do have new data. The head of the European Commission, of course, Ursula von der Leyen, says that at the start of the year, so this is before the war started, 40%, of imports of gas were coming from the Russian Federation. Now that has gone down to 9%. She says the goal from now until the end of the year is twofold. One, to bring down the revenues. Vladimir Putin is making a lot of money even as he wages war. And then the other one is to stabilize prices for European consumers. There is a very important speech by Ursula von der Leyen on Wednesday. She is expected to unveil executive action on that. And of course, we'll be paying close attention there because we'll be live from Strasbourg that day on Wednesday.
Maria, thanks so much. Maria Tadeusz there in Brussels for us. Now, to talk about the markets, we're joined by Bloomberg's Christine Aquino from our Markets Live team. Christine, thank you so much for joining us. I know that, part of the market sentiment is also because of the offensive that Ukraine able to push through Russia, but also Europe playing a huge part in today's gains.
Absolutely, Francine. And I think, the other side of that, of course, is dollar weakness. And it really has been a story for the euro of two things, right? It is that dollar move this year, and then also what's happening in mainland Europe. And so I think, today we are seeing a little bit of positioning reduction from last week, especially after we've heard from the ECB and several other ECB officials in the aftermath of that. And I think the message really is clear that the ECB is open to another potential jumbo rate hike, which could finally see the euro kind of getting that benefit of monetary policy and interest rate differentials that it really hasn't seen up until very recently.
But is that sustainable?
That is a big question, isn't it? Yeah, I mean, it is difficult to kind of see how sustainable it is when the other side, of course, of the euro story is, again, this energy crisis that is looming over us over the winter time. And, as we talked about earlier today, the euro story is really more of a terms of trade sort of story now. And a lot of that has to do with the energy crisis rather than kind of interest rate differentials and monetary policy. But I suppose, the question maybe is could the euro kind of get a little bit of at least a short-term windfall from the fact that the ECB is now finally catching up and potentially, if they deliver another jumbo rate hike, then could finally put them, close that distance between the Fed. Yeah.
Christina, this is, of course, going to be a very odd week in the UK. We're both in black to pay respects to the Queen. We have that funeral with the bank holiday on Monday. How, I guess, discouraging will that be for an economy that's already suffered quite a lot?
Yeah, absolutely, Francine. I mean, I think it really is just kind of adds to the mood in the country at the moment, with the death of the Queen. It obviously puts pall on a lot of things, and sentiment isn't great. Even before that, of course, we're dealing still with the cost of living crisis, and Liz Truss really coming into quite the challenge here in terms of managing the economy and managing the mood of the nation. And so it is going to be quite interesting seeing just how it's playing out in markets. Again, we've seen that pound story really one of weakness playing out. So I think moving forward, it will depend a lot on the next moves that Truss makes here and how that plays into sentiment.
Overall, what's the next step? I don't know whether we're looking for a catalyst, but we are, September 12th, we'll go into the winter months. Is it all about the energy price and how much of that bad news and higher prices is already priced in?
Well, I think the initial downleg in the pound was very much part of that whole story of, bracing for the winter time, really a tough winter, the cost of living crisis still kind of making its way through the economy. And so, I think there is a little bit of, given that positioning is very heavily skewed towards a weak pound, we could see a little bit of green shoots here, just as a matter of positioning adjustments along the way. And then the different catalysts that we could see along the way as well. The Bank of England, what they say about a potential rate hike there, whether they're going to go the way of the ECB and the Fed in terms of 75 basis points. And then, of course, from Truss herself, what she's going to be doing in terms of providing support to the economy and the details of that. I mean, that was originally pound positive. So if you see more details, we could be in for a bit more of a lift here.
Christine, thank you so much. Christina Kino there from our Markets Live team. Now, we're also getting some breaking news out of Lufthansa saying that the pilots union have actually agreed on an increase in basic pay. Lufthansa says pilot strikes excluded until the end of June 2023. Now, we're seeing a couple of resolutions here and there as people also understand that inflation is going up. And so maybe it's just a good idea to pay workers more before they quit. Now, coming up, we speak to Franklin Templeton Investment Chief Executive Officer Jennifer Johnson. Jenny Johnson, exclusive conversation, extended conversation. That's after 9:30 a.m. London time, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sweden's coalition of right-wing parties looks set to secure a narrow victory in the country's general election. The likely result hinged on the rise of the anti-immigrant party, the Sweden Democrats, which saw the biggest gains to become the nation's second largest political force. With 95% of districts now counted, the opposition bloc has has 175 seats in the 349-seat parliament, giving them a slender advantage over the ruling Social Democrats and its allies. Now, the Biden administration is reportedly planning to broaden curbs on the export of semiconductors used for artificial intelligence and chip making. Reuters cites unidentified sources saying the Commerce Department plans to publish new regulations next month. The rules will outline restrictions already communicated to companies including Nvidia and AMD. And Japan is reported to be planning to allow foreign visitors to book trips directly and travel freely within the country. According to the broadcaster FNN, officials are also set to scrap daily arrival caps and reinstate visa waivers for tourists. The rules are expected to apply to travellers who have had 3 vaccine shots or who can provide a negative COVID test result. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Queen Elizabeth's coffin was driven slowly from Balmoral Castle to the Scottish capital, Edinburgh, yesterday as the country continues a period of mourning. Politics, meanwhile, are on hold as people line the streets, taking part in a historic farewell to the monarch who reigned for 70 years. Now, joining us to look ahead to the next few days is Lizzie Burden, live from Buckingham Palace. Lizzie, what's the atmosphere like down there?
I have to say, Francine, it's less tearful, more sombre, respectful. People are coming here to say thanks to the Queen for all those decades of service. I was here before the sun came up and people were just taking a quiet moment of reflection at the palace gates. The King, Charles III, is going to travel to Edinburgh later today for a service of reflection before tomorrow the coffin is brought back to here, Buckingham Palace. And then from Wednesday until the funeral, which is now confirmed for September the 19th, people will be able to pay their respects as the body lies in state at Westminster Hall. Some of the UK newspapers are expecting 750,000 people to file past. It's going to create very long queues, security challenges, and really, if you think about the death of Princess Diana or the Queen Mother, multiply it by 10, because this is an outpouring of national grief, the scale of which we haven't seen in our lifetimes in the UK at least. So it does put the business of government on hold. It's not Liz Truss's fault, but it's difficult for her second week of her premiership.
So what are we expecting over the next few days, Lizzie? We know that the funeral, of course, is next Monday, and then we'll have a week long of pageantry and processions.
Quite exactly, and we're already seeing significant moments in the royal family. We saw over the weekend the Fab Four, as they were affectionately known, Prince William and Prince Harry and their spouses, joining together to speak to members of the public and share in the public grief. It's really a deliberate acknowledgement of the need to do that, something that the royal family has been criticised for not doing in the past. And so I think you can expect to see more of those moments as Prince Charles and King Charles and the Queen Consort go around the different regions of the UK, meeting people and sharing in their grief.
Lizzie, Liz Truss also sacked a top civil servant in the Treasury in her first days. What's the significance of this?
It's a big, bold move, Francine. Along with the energy bailout, one of the first things that Liz Truss has done in office. Remember, she did say that she wanted to take on the blob of Treasury orthodoxy, and this is a symbol of that. We heard over the weekend from one of the government's former top civil servants that this could undermine the UK, a huge moment of change in British history. City says that it could open the door to yet more unconventional policy. And really, it leaves a vacuum of power at the top of the Treasury when you've got a background of double-digit inflation. But the other thing that this could lead to is brain drain at a department that has some of the UK's most employable civil servants who are likely to be dangled with the biggest alternative salaries in the private sector. So it is a worry.
Lucy, thanks so much. Lucy Burden there outside Buckingham Palace. Now, the former New York Fed President, Bill Dudley, says the central bank will not be making the same mistakes it did in 2019 as it reduces asset purchases and shrinks its balance sheet. Well, he spoke to Bloomberg Surveillance.
The Fed has the experience of last time to go by. Last time they were surprised by the demand of banks for reserves, and so they unexpectedly drove the amount of reserves too low relative to banks' demand. That's why you got the spike in repo rates in September 2019. So they've learned from experience. Second, they put in place a standing repo facility now, which is available just slightly above market rates. So if repo rates were to spike up, banks would turn to the Fed's standing repo facility. So you wouldn't see a big spike. It'd be a little spike this time. Lastly, I think the Fed's going to be tapering the rate of how its balance sheet shrinks as we get deeper into this process. At first, we're running off $60 billion of treasuries, up to $60 billion of treasuries and $35 billion of agency MBS each month. But once the reserves in the system get to a significantly lower level, the Fed's going to slow the rate of asset runoff. And then it's going to stop. It's basically going to stop. It's going to stop before they think we're at that critical point where reserves are too scarce. So they're going to learn from past experience, and I don't think they're going to make the same mistakes this time.
Bill Dudley, have we done this before? Has the New York Fed down in the basement, it's underneath one of the pizza parlors down in lower Manhattan, have you done an experiment that says this is going to work, or are you flying blind?
Well, I think you did the experiment last time following the great financial crisis. The Fed shrunk its balance sheet, and we had that experience in 2019 where they shrank it a little too much.
Right.
So they're going to learn from that episode and not do the things that they did last time. Last time, they never slowed the rate of asset runoff. They never stopped the asset runoff prior to the reserves becoming scarce. And I think this time, they didn't have a standing repo facility. So I think this time they have sort of a belt and suspenders, and they didn't have either a belt or suspenders last time.
So they've belts and suspenders for a problem that won't necessarily repeat itself. But where are the belt and suspenders for a dollar getting too strong for the rest of the world to really sustain its momentum?
Well, this is a problem always, that the Fed follows monetary policy based on what's best for the United States, and the consequences of the rest of the world are the consequences for the rest of the world. And a strong dollar is one of the consequences of the Fed tightening monetary policy now quite aggressively. The Fed actually wants the dollar to be relatively firm because a stronger dollar restrains economic activity, and it reduces inflation because it reduces the cost of imports into the United States. So the Fed is not unhappy with the dollar strength. This is just part and parcel, one aspect of how you tighten financial conditions.
Coming up, the world's hottest housing markets are facing a painful reset amid soaring borrowing costs. We look at the big take next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's turn to the global housing market, and the hottest regions are feeling the pain as they face a reset. That's as soaring borrowing costs squeeze home buyers and property owners alike. Now that's the subject of today's Bloomberg Big Take. Now for more, we're joined by Neil Callanan, our London bureau chief. Neil, I know you're a great student, and for many years actually you've been reporting on properties. How painful is the reset, and in which country specifically?
Yeah, I think we're going to see the biggest pain in the housing market that we've seen since the global financial crash. The Fed and other central banks' policy of quantitative easing has driven yields for real estate lower and driven cheap credit has pushed prices higher. With Treasury yields now going up and bond yields generally going up, that means for international investors, real estate is less attractive, but also you've got a cost of living crisis and an inflation crisis meets rising interest rates. So in those countries with variable mortgage rates or with short-term fixed rate mortgages, you're really going to see pain. So that's the UK, Canada, Australia, New Zealand, China and Sweden. Sweden will be the canary in the coal mine for for Europe.
So out of those countries, is there one we should worry about the most because of its over-reliance in terms of GDP? And see, I remember, and I don't remember because I was too young, but I keep on going back to the 70s and say at the time that it was also a refuge, right? Because inflation was going higher.
Yeah.
So people would take money out of the markets and put it in real estate.
Yeah, and that was the theory as well in the 90s, and it really didn't work out in Canada in particular. In Toronto, people put money into housing as an inflation hedge, as an investment, and it really didn't work. So again, Canada and Australia in that sense are probably the most vulnerable. China's already going through a bubble as well. And in Sweden, they've been borrowing for so long. I mean, 50-year mortgages aren't unusual there, that the market can change quite quickly and has. And you're looking at double-digit falls in a number of markets this year, particularly Sweden, Australia, New Zealand, and possibly Canada as well.
So should we really worry? I know also the current has done quite a lot on China. I mean, what does this mean for China? Do the global markets understand how ugly this could be?
I think with China, the big qualifier is always what will the government do and whether the government will bail out the property developers. So it's hard to predict. But based on current trends and the lack of investments and the fall in profits, you are going to see a big squeeze there. There has been already, and that's likely to continue. One of the things I would be interested in is how much development land values fall there, and that's really what can cause a lot of trouble for developers.
Neil, thank you so much. Neil Callanan there, our London bureau chief, and you can read more online or at NI Big Take on the Bloomberg terminal. Coming up, Bitcoin rally cools and the dollar retreats. We chat markets with Franklin Templeton President and Chief Executive Officer Jenny Johnson. That's coming up next, and this is Bloomberg. Rapid advances. Ukraine's forces make swift gains in the Kharkiv region as Russian defenses crumble. Dollar weakens, stocks rise, the euro surges as a Bundesbank voices support for more ECB hikes. Plus, Charles III, well, the new UK monarch, is officially proclaimed king as the late Queen Elizabeth's state funeral is set for September 19th. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, shares are rallying this morning. The dollar is retreating on strong euro performance. Now, that's as investors now weigh the prospect of more outsized interest rate hikes in Europe. If you look at, for example, the gauge of the dollar falling for a second day as all G10 peers surged, except actually the yen. Now, to talk broader, not only about the markets, but really some of the strategy at Franklin Templeton, we're delighted to be joined by Jenny Johnson, President and Chief Executive of Franklin Templeton. Johnson has been chief executive since 2020, and Franklin Templeton has $1.5 trillion in assets under management. Jenny, what a great pleasure to host you actually here in the London studio. So welcome to Surveillance and welcome to Bloomberg headquarters.
Thank you, Francine. It's great to be here.
The strategy of Franklin Templeton has been really quite remarkable over the last couple of years, and this is acquisition. I know there's a number of things that we need to talk about. Alcentra, Lexington, Legg Mason. So pretty bold moves in terms of M&A. What comes next?
Well, so we've been pretty clear on our approach to acquisitions. It's either filling out product-based, right? So we see the industry moving towards alternatives. We wanted to make sure that we not only had traditional asset management capabilities, but also we're strong in the alternative space. So you saw our acquisitions there. I think the technology is making it such that you can have much greater customization for clients. So we do fintech investments that help us customize. We did a company called O'Shaughnessy Asset Management that brought us something called a Canvas platform, which does direct indexing. So it's about customization. And then building just deeper relationships with clients. So providing additional products to be able to engage with them.
So, Jenny, as you bring these into the family hold, what's been the biggest challenge? Is it keeping their own identity? Is it somehow bringing them together with a common purpose?
So I think the key for us has been, in the asset management business, what are you buying? You are buying people and their investment process. So as long as you're willing to leave that independent and provide additional services, we think active management, things like data, become more and more important, data analytics. So being able to provide platforms, we have a centralized investment data lake, so any of our investment teams can leverage it. Those types of value add to help the investment teams that we acquire be able to have additional capabilities. That's critical. The other thing is, you'll have this ability to create this more customized solutions. So, for example, our Middle East fixed income team that, we're one of the largest Sharia compliant managers. They were talking to a sovereign wealth fund that wanted private credit, but wanted the Sharia overlay. Well, they didn't do private credit. So bringing Benefit Street Partners, ultimately Alcentra, with their screen of Sharia compliance offers a completely new product. So getting the teams to talk to each other, to think about creative ways that we can customize for clients.
So creative ways also go to alternatives, right? Is this the future, and how has that been performing over the last 5 to 6 months where there's quite a lot of uneasiness in the markets?
Well, what we've seen is that, from 2000 till now, there are half the number of U.S. public equity companies, and there are 5 times the number of private equity-backed companies. Companies are waiting much longer to go public. 2000 average, they went public after 3 years. Now it's 9 to 10 years. So you can, from an investable universe, you have to be able to enter the private market space. With respect to credit, you'll hear banks say, look, the capital requirements have been raised. We're going to be very careful about how we deploy capital. We're going to use it for our best clients, which means there are a lot of people left out of the credit market. So private credit's grown dramatically. So I think from an investment standpoint, you have to be able to be in the alternatives in private.
Does that change with actually these higher inflation? I mean, we're going through a huge uncertainty with cost of living crisis, inflation, in our markets that could be 8-10%. What does it do to the alternatives?
I think that there's some question. Any kind of private equity strategy that was based on leverage, right, is going to be challenged. But many of them are based on growth, and companies, especially as you have technology companies, those aren't as reliant, and it's not as risky on the, from the interest rates rising.
Jenny, is there anything else that you want to buy right now to actually fold, or are you, for the moment, are you done in terms of M&A?
So what we've said, we certainly feel like our plate's pretty full, but areas we're always opportunistic. If to globalize our alternatives platforms, Alcentra was a move of taking a U.S. private credit manager and adding European capabilities. So if there were some geographies that made sense for us, we'd be interested there, or specific fintech type of strategies that we thought were interesting from distribution, we may be buyers and things like that.
Jenny, when you look at your portfolio, I guess, companies, I mean, Western Asset, I know we've talked about it in the past where it's going through a tough time because of its exposure to Russia. Do you stick to your guns with it, or does it have to somehow be repositioned?
Yeah, if you look at Western, right, in the last 20 years, anytime they've underperformed, they significantly outperformed in the next 6 months. So I think the key, I always say, I manage investment people. My job is to make sure they have the resources and that they stick to clients, hire them for their expertise. And so Western has a very, very sophisticated investment, long-term track record product. I think they'll be just fine.
Okay, we'll talk also about crypto and actually blockchain shortly. Jenny Johnson there, the president and chief executive of Franklin Templeton, stays with us. Coming up, a Bitcoin rally cools ahead of U.S. CPI data and a seminal upgrade of the Ethereum blockchain. So we'll have plenty more on that next. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bitcoin is gaining today. That's as investors await U.S. inflation data and monitor a seminal upgrade of the Ethereum blockchain, events that could actually stir volatility in the crypto market. So that's the daily moves. But how attractive will this be as an asset class in the future? Well, still with us is Jenny Johnson, president and chief executive of Frankel Templeton. Jenny, thank you for staying with us. I mean, you are someone that right from the early beginning actually was an early adopter of blockchain, which doesn't necessarily mean Bitcoin, but you see this developing in ways that we can't even imagine right now.
Agreed. I mean, I think, and I always say that Bitcoin is the greatest distraction from the greatest disruption that's coming to financial services. And that does not mean I think Bitcoin is worth zero. I think Bitcoin's more like art. If you and I agree this is the price, it is. Yeah. What is lost in that conversation is all of the fundamental changes that can happen with Web 3.0. Yeah. So if you think about Web 1.0, that was kind of, think about it, reading. Those who are old enough remember your internet site was going to be a billboard. Then you learned you could communicate. That became reading and writing. We could communicate back and forth. Web 3.0 is ownership. right? And so the types of businesses that are coming out, and most of them are really clunky today, but they will be significant. And as investors, I think they even impact equity markets. So an example, there's a company that wants to be the fastest streaming service. So if you're watching their content, you get paid to watch it because you're agreeing to let them use your device to cache content to pass off to somebody else. So now you've become a client, you're a user, you've become almost like an equity owner because they pay you as the network grows, and you become part of the infrastructure. They can buy less AWS cloud because their clients are all providing it. And it's the blockchain technology that enables this kind of thing. As we talked about, alternatives, unlocking alternatives for the retail channel is going to be, I think, powered a lot by tokenization and blockchain.
And I was going to ask, actually, how do you unlock that value? So if you're a believer that it actually changes, I mean, I guess, the relationship from investor, it changes everything.
Everything.
How do you play it now in 2022?
So we actually just yesterday announced launching a SMA platform where you can invest in. We took a traditional fixed income team, and they have several different strategies. Some are passive, where you get just market weighted top 20 coins. Others are equal weighted, and then others are investments. If you looked at our digital asset team, their write-ups on things like Ethereum are the same types of detailed write-ups that you'd have on any kind of traditional investment in IBM or anything else. And so I think you want to get some exposure. The problem is there's going to be way more losers right now than winners, and that's the challenge.
And is there a challenge because it will change the narrative of how it's portrayed in the media? I mean, is there a danger that actually if there are too many losers, then you don't have the positives advance in a timely fashion?
I mean, I tend to personally like the platforms, the things, and this is what people I don't think completely understand, is Ethereum is like the iPhone. When the iPhone first came out, you looked at the iPhone and you said, oh, this is pretty cool. I've got GPS, I got a flashlight, right? Now, and then, but what Apple understood is they were unlocking this capability that anybody creative could create applications. Ethereum is just a platform for businesses to be built on. Solana is a platform, Cardano. The problem is there's a lot of those platforms, and I think over time maybe we have some consolidation, but today that would probably be where I would play it.
I know you also have an innovation center, right, for finance. Is there a first mover advantage? I mean, we've been talking this for quite some time, but if you're big in the space now, can you still win it?
Oh, for sure. I think you can win it. But I also think, and that's one of the reasons we have our incubator, is we want to stay on the forefront of understanding where disruption's going to be disruptive to us as a business. But there's a company there that started out, actually, a couple of women who left, traditional auction houses and wanted to be in the art market, and they've shifted to NFTs. And they're doing really interesting things, helping artists, leveraging the NFT technology to actually improve their own economics. If you tie an NFT to a traditional piece of art, today an artist makes 30% of the first sale. But if the NFT is tied to it, you can build in the smart contract all future, that you get a piece of all future transactions. That's pretty neat.
Yeah, it's pretty cool. Jenny, what are you expecting over the next 3 to 4 years as disruptors to market? So does inflation change everything? Does it change the narrative of active versus passive?
I think where active thrives is in volatile times, and inflation is a volatile time, right? And unfortunately, a lot of the people managing money today have never been through an inflationary cycle. So active fixed income, I think it's really, really important. There's a lot of different ways you can play rising rates. I think in what we've seen as a big growth market, well, growth tends to do very well with low interest rates because you're looking at the future cash flows. So I think that this is a time where active can excel. And of course, active has to prove that they can, and picking the right active manager is really important.
Is there a part of or a certain type of investor that will actually just get out of the markets in this volatile times?
I always think that's the fear, that an investor gets burned. It's actually a little bit what worries me about the crypto market is that people are playing in that market, and they'll ultimately say, well, I didn't understand it, I can't invest. And the same thing happens. Meme stocks are always one that sort of I get worried about. People think they're doing something, and we're all going to jump into it, but they're risking their retirement. So concerns.
But this means what? Right, regulators are too slow to regulate it, and I guess it puts them in a really tricky position of how do you regulate a market without being seen as squashing. I don't know if it's innovation, but just misunderstanding what they're dealing with.
Well, I think the regulators are afraid of making a mistake. And somebody described to me, they said, we've got flying cars and we're trying to apply traditional street laws, right? And so knowing what those unintended consequences of a regulation is, I think makes a regulator be pretty fearful. The problem is, I think that there are jurisdictions that are regulating, Singapore, some of the Middle East countries. And so what you're seeing is these digital asset companies actually setting up there. I think that's a bit of a risk, too. If you don't regulate it, you get the Wild West and people get burned.
Jenny, I mean, you're in charge of a massive company. What's your biggest challenge over the next 2 to 3 years?
Well, I think we're a people business. And so making sure that we are delivering for our clients and retaining our great employees. I think that's always really important. So I focus on our talent.
What do they need? Flexibility? Is it bonuses? How has the COVID narrative actually changed?
I do think the return to work, none of us have quite figured out whether how much flexibility you need and how important it is getting people together. I'm a big believer in presence with a purpose, that this has shifted to leaders to make sure that leaders, for our employees to commune in, that they make it a valuable time, that people get together and spend time together. We just now push to have 2 days a week coming into the office. But those days where people are coming into the office together so they feel that there's a real community, I think that's important. But on the other hand, I don't think we're ever going back to 5 days a week or even 4 days a week. I think it's going to be unlikely.
Jenny, thank you so much. Such a great pleasure to host you here in the studio. Thank you so much for coming in. Jenny Johnson there, the President and Chief Executive of Franklin Templeton. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. France power distributor Strasbourg Electricity oversold large quantities of electricity due to trading errors earlier last week, a mistake that could cost the company 60 million euros. The FT says the French grid operator was forced to send an emergency power alert to neighbouring countries, including the UK and Spain, asking them to be ready to help make up any of those shortfalls. Now, tens of thousands of US railroad workers could be on strike by the end of this week, causing a potential new shock to the country's supply chains. Negotiators met throughout the weekend trying to reach a deal with two unions covering some 57,000 railway engineers and conductors. The Association of American Railroads predicts a nationwide shutdown could cost up to $2 billion a day. And activist investor Dan Loeb has backed away from calling for Walt Disney to spin off ESPN. In a series of tweets, Loeb said he looks forward to seeing the sports network generate considerable synergies as part of Disney. Separately, Disney CEO Bob Chapek says ESPN is critical to his overall vision of the company, which does include sports betting. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, the UK economy grew less than expected in July. We'll focus on the country's economic outlook next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, a new era has dawned on the UK this week as the country has a new monarch and a new prime minister. Some things, though, remain the same. Inflation eye-watering, with the UK facing soaring energy bills and a wider cost of living crisis. Now, all things for the Bank of England, of course, and its Governor Andrew Bailey to monitor ahead of the next delayed rate decision. Joining us now is Andrew Sentence. He's Senior Advisor for Cambridge Econometrics and former member of the Bank of England's Rate Setting Committee. Andrew, always great to speak to you. I mean, you never mince your words when it comes to inflation and what the Bank of England should do next. Are you worried about the next 6 months?
Well, it's going to be a difficult 6 months. The economy is really not growing. It saw an increase in GDP in July, but that was quite small. I think we'll see ups and downs in the economy. But the big worry is inflation. And their inflation watchdog is the Bank of England. And they've already pushed up interest rates a bit. But I think they're going to have to continue to do that to stop what is partly a temporary rise in inflation becoming more embedded in the economy.
How much do you worry about weak euro and actually some weak pound and some of the things that Liz Truss is talking about? There's serious questions about how she funds all of her plans.
Yes, I mean the pound has been weak, particularly against the dollar, less so against the euro. Yeah. But increases in borrowing, continually rising inflation, those are not going to be things that are good for the pound. So it is a factor that needs to be taken into account by the new government in designing their economic policy. But on the other hand, there is a need to do something to ameliorate rising energy prices. So there's a balance to be struck there by the government. And there's a balance to be struck by the Bank of England. But I would expect interest rates to continue to rise to 3 to 4%. The market's expecting, I think, 4% in the early part of next year.
What does that mean for mortgages? Is this your biggest concern when you look at the UK as a whole? Is it consumer spending, but actually could we see a mortgage collapse?
Well, we've seen very cheap mortgages for a long time, and actually that's fueled house price inflation, which until recently was running at double-digit levels. It's come off a little bit. We can't sustain double-digit house price inflation, so if higher mortgage rates bring a bit more realism into the housing market and put a dampener on house price increases, that's not necessarily a bad thing. And it actually makes it easier for first-time buyers to get on the housing ladder. So interest rates have sort of mixed effects in the housing market. We tend to think of the whole UK economy as one big borrower.
Which, of course, is, yeah.
Which it isn't, because only about a third of people are borrowing on mortgages. Yeah. So there's a lot of other people in the housing market. Some are renting and want to get on the housing ladder. Some own their property outright. And therefore, in some ways, they benefit from higher interest rates.
Where do you see the UK economy headed more on a philosophical level in 4 or 5 years? So if there's a lot of deregulation, which the Prime Minister wants to put in place, if we see, tax cuts, there's talk about us becoming like Singapore on Thames. Does this make sense for this kind of economy?
I do think it's good to look at supply-side reforms, but supply-side reforms have to be, well designed to impact on growth. And we haven't really seen any detail. We've had talk about tax cuts, boosting growth, removing regulations. We need to see more detail, and there needs to be more consideration of the detail of what that's really going to mean. I don't like the idea of Singapore on Thames because Singapore is a much smaller economy. So a medium to large size economy like the UK needs a different approach, I think.
I mean, it was Mark Carney that said, we rely on the kindness of strangers, and others talk and worry about the balance of payment. Should the Prime Minister worry about that more instead of, talking about this unorthodox economics?
I think the balance of payments was more a preoccupation in the 60s and 70s, and when you've got a floating exchange rate, it's not necessarily a cause for crises. It's an indicator to look at, but just one of many indicators in terms of assessing the health of the economy.
Where's your take on how the UK should deal with the EU, and how much pressure, if we have a very belligerent Prime Minister, that puts on the Bank of England to possibly do even more?
I don't know whether the Prime Minister is going to be belligerent, but I think in terms of the European Union, we always have to have a close relationship with the EU, and we have to take into account our trading relationships with them. So I hope the new government will recognise that. Even though we've had Brexit, we need to actually find ways of improving some of our relationships with the EU, for example, through getting perhaps a better system for allowing labour to come into the UK from the EU. So there are various ways we can actually cooperate and work together with the EU, and I hope that's what the new government will do.
Andrew, thank you so much, as always, for coming in. Andrew Sentence there, Senior Advisor for Cambridge Econometrics and former member of the Bank of England's Rate-Setting Committee. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Preeti Gupta in New York, Anna Edwards here in London, and this is Bloomberg.
think that there's still a lot of uncertainty.
We are seeing a lot of volatility in the markets at the moment.
The Fed is not unhappy with the dollar strength.
I think it's very difficult to be the head of a central bank right now.
It's very important for them, for investors and for the market to see inflation coming down.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Dollar dilemma. The greenback tumbles ahead of key inflation data this week, while the euro strengthens on the prospect of more outsized interest rate hikes. Gaining ground, Ukraine's forces continued their rapid advance in the Kharkiv region as Russian defenses crumble. And housing pain from Sydney to Stockholm to Seattle. Buyers are pulling back as central banks raise rates at the fastest pace in decades, sending house prices falling. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Chrissy Gupta in New York. Kailey Leinz is off today. And Chrissy, it seems that in terms of market sentiment and appetite for risk assets, progress by Ukrainian forces and weakness in the dollar in the driving seats.
Yeah, and it might be that turnaround story that is actually fueling Asian assets, perhaps having a ripple effect across the world. Let's start with that. What's going on in the overnight session, though? You did have across the Asia-Pacific region, green on the screen, Anna, but it's that real outperformance in the Hang Seng Index I really want to zero in on, because there's outperformance, there's green on the screen, but you have to look at where the profits are actually kind of allocated. And a lot of this is happening in tech. That's a sentiment that you're going to see ripple across the rest of the world. I'll let Matt hit that in a second. But you can really see that Hang Seng outperformance up about 2.7% in the overnight session compared to the broader MSCI Asia Pacific region, which was really only up 0.7%. So you can really see a lot of people piling into that big tech trade there. Let's hit the currency picture, though, because Anna, you hit it. That dollar story is going to be crucially important, especially as we talk about what the barriers to entry are into the tech trade, especially when it comes to American tech. Very specifically, right now you have a little bit of strength in the offshore renminbi or yuan, whichever you'd like to call it, some weakness in the dollar there. That's going to be crucial when we're talking about this race to who has the strongest currency. And right now, the United States and the Chinese yuan, of course, with that intervention is going to be a key part of that story. The other part of that story is going to be the Japanese yen. You are seeing weakness there once again, even after some perhaps attempts at verbal intervention from the likes of Kuroda, from the likes of the Deputy Cabinet Secretary over there as well, not doing much to help the yen at the moment, Matt.
Well, if it's a race, we are still winning by a lot against everyone. But we are coming down a little bit today. Here you can see the Bloomberg Dollar Index, the only red on my screen right now at 1289. Remember, we were well over 1,300 for the last few sessions, so it's a pretty significant drop. But the others have a long way to go to catch up with us, and I don't see it happening anytime soon. S&P futures right now up about 0.6% at 4111, so some pretty strong gains even after we finished up above 4,000 last week. The U.S. 10-year yield coming down a little bit, so investors are buying some of that debt, but only 1 1/3 basis points, so 329.65. And then Bitcoin, one of the big stories of today, although it's odd to think that a 3% gain is a lot for Bitcoin, but it hasn't been moving much at all lately, and certainly not north of the $20,000 level. So 22,256 is going to mean a lot of crypto movers on the stock market. Anna, what are you seeing in terms of European stocks?
Yeah, we see a lot of appetite for stocks generally, for risk assets. We've got European stocks moving higher than Matt, and perhaps it is those FX moves that we've been discussing. Perhaps also some of the advances we're seeing the Ukrainians make against Russian forces. All of that adding up to a little bit of a rethink this morning, or at least a continuation of Wall Street's Friday session, where we saw strength in stocks over in the United States. So this is the picture in Europe, pretty strongly positive, up by more than 1% on some of the major markets here in Europe. Let's have a look at some of the FX movers here, because this is a crucial factor to keep an eye on. This is the euro side of that weakness in the dollar that Matt was just pointing out. To strengthen the euro, then we heard from Bundesbank's Nagel talking about further rate hikes to come. So in case you are under any illusions, we are going to see further interest rate hikes from the ECB. That's the word out of the Bundesbank, at least. 116.94 is where we trade on the pound. So again, risk assets moving higher, strength to the pound, despite the fact that we got some growth data for the month of July that was below estimates, that recovery from the slump in June that was driven by the moving bank holidays. All of that not really knocking the pound this morning morning and 116.93, although it bounces up from recent weakness, of course. Here we've got the Swedish krona. The Swedish krona actually gaining. That's what you're seeing here against the US dollar. And this in the context of politics. But really, it is that weaker dollar story that just seems to be dominating everything, because there are a lot of questions to now ask about the new government in Sweden, how long it takes to get into position, how it gets formed, what policies they have, and a lot of uncertainty. But the market choosing to look through that uncertainty today, sell the dollar, buy the krona instead. And this is the natural gas benchmark over in Europe, down by 6.2%. We've been tracking it around the 200 euros per megawatt hour mark for a little while, and it continues its retreat as we look ahead to Wednesday. We didn't hear much on Friday from energy ministers in Europe. What will we hear on Wednesday from the commissioners? They try to put together a plan, Chrissy, for the winter.
Yeah, that's going to be crucial, right? Really, once again, I mean, Matt makes fun of me all the time for saying that I'm obsessed with currencies, but Anna, it really is that dollar story to me that is catching the eye.
Not just for that.
Well, Matt, there's a long list. There's a long list for Matt. We'll leave it at that.
I'm kidding, by the way. Behind the scenes, we are like best friends, so.
I mean, we used to be before this show. We'll see where that goes. Let's take a look at what's going on in the week ahead. On Tuesday, Twitter is holding a special meeting for stockholders to vote on the proposed acquisition of the company by Elon Musk. We'll get U.S. CPI data on Tuesday. UK CPI data is released on Wednesday. And EU Commission President Ursula von der Leyen delivers her annual State of the Union speech on Wednesday as well. And Russian President Vladimir Putin and Chinese President Xi Jinping will meet at a summit in Uzbekistan on Thursday and Friday. Certainly something to keep an eye on, Matt.
Yeah, absolutely. And I also am watching FX, the euro's surge. It's the most in 5 months against the greenback after an ECB policymaker said further interest rate hikes would be needed to curb inflation. Meanwhile, the read across from any U.S. dollar weakness will be a key input into global risk assets in the week ahead. Inflation developments in the U.S. and Europe will play a role in the currency and risk outlook, of course, as will millions of other things. Bloomberg's Danny Berger joins us now for more. Danny?
Yeah, right below 1.019 for the euro. Some pretty massive moves, as you say, Matt, the biggest in 5 months. Some traders reporting that they were caught off guard by this, so perhaps some stop losses coming into the fore, accelerating this move. Now, in terms of what's causing this, yes, you have a bit of the technical, but we continue to hear from ECB policymakers ever since that 75 basis point hike last week say that they are continuing on that piece. Over the weekend, we heard from Joachim Nagel, who also emphasized this as well, feeding into the gains in the euro that we have seen. He said that Thursday's step was a clear sign, and if the inflation picture stays the same, further clear steps must follow. So that gets us a market that continues to price in 75 basis points for the next hike. Now, there's some also conversations swirling around that perhaps the advancement of Ukrainian troops in Kharkiv, that's adding to strengthen the euro. Robin Brooks, the chief economist over at IIF, says that that's a mistake to price that in, just given Putin's resolve in this war. So that's another factor, but it all feeds into a dollar that has started to fall, down about 2% from its high on Wednesday. The question we will ask, especially when we get those CPI figures come tomorrow, is this just a correction from some of the high levels we've seen? Or, Anna, is this a sustainable turnaround in what has been trend of a strong dollar?
Yeah, absolutely. Strong dollar has been such a talking point for so long. Is this then a sustainable turnaround? Danny, thank you very much. Bloomberg's Danny Berger with the latest on the FX market. Such a big theme. Another big theme, of course, is what we're seeing on the ground in Ukraine. Ukraine forces continued their rapid advance in the Kharkiv region yesterday. The advance represents Ukraine's biggest victory since they pushed Russian troops away from the capital, Kiev, in March. Maria Tadeo, our European correspondent, joins us now for more. Maria, update us with the latest developments.
Well, Anna, it was a quick but very effective operation on Saturday from the Ukrainian army. They have made big headwinds or inroads in the eastern region of Kharkiv. It reminds us, you say, of that failed convoy that tried to take on the Ukrainian capital and then, of course, had to be dissolved. This is nothing short of a logistics nightmare for Russia, which, by the way, concedes, and this is very rare, that it had to pull back men. They say this is a regrouping. It's not a defeat, but nonetheless, in language language here is very telling. And then, of course, overall, you have the Ukrainian president saying that, quote, the liberation of occupied territories will continue. He says more than 200 square kilometers have been liberated since the start of September. He also says more weapons will get the job done. But the real question now going forward is how will Russia and how will Vladimir Putin respond to what is now a very public but very embarrassing also too episode for the Russian army?
Maria, I wonder what that means when it comes to the European energy story. Of course, we know a lot of the dependence has been trying to be removed from Russia, but does that mean that there's a turnaround on the horizon here?
Look, I think when you look on the military side of things, it is very early to say this is a turning point, but it is clear that on the battlefield, the momentum this weekend shifted from Russia to the Ukrainian army. The Russian army is moving back, it's on the retreat, and the Ukrainian army is advancing. Whether that can be sustained, that is really the key question. When it comes to the energy story in Europe, well, the Commission has released and has put out new data saying at the start of the war, the number of imports from the Russian Federation to the European Union was 40% of gas. That number has come down now to 9%. So you could see that decline. And they say this really spells the end of the partnership when it comes to energy between Russia and the European Union. Critics, however, will tell you it should have never happened anyways.
Maria, thanks very much. Bloomberg's Maria today with the latest on, Ukraine and also what's going on with the European energy story. Back here to the UK, and Queen Elizabeth's coffin was driven slowly from Balmoral Castle to the Scottish capital, Edinburgh, yesterday as the country continues a period of mourning. Politics, meanwhile, is on hold as people line the streets taking part in an historic farewell to the monarch who reigned for 70 years. Joining us to look ahead to the next few days is Lizzie Burden, live from Buckingham Palace. Lizzie, we now know the date of the funeral. It takes place a week from today. What is the plan over the coming week?
Yes, Anna, I'm here at Buckingham Palace, and people have been coming to the gates of the palace since before the sun came up just to pay their respects. They're not generally tearful. They're here to just say thank you to the Queen for all her decades of service. So later today, the King Charles is going to go to Edinburgh for a service of reflection. Then tomorrow, the coffin will come back here to Buckingham Palace. And then from Wednesday until the date of the funeral, the Queen will lie in state at Westminster Hall so that people, members of the public, can file past. And UK newspapers are reporting, estimating that 750,000 people will do so. It could be hours-long queues. Think Lady Di, think the Queen Mother, and times it by 10, because this is really a moment of national outpouring of grief. It has meant that the business of government is paralysed. The Bank of England has postponed its meeting next week. And we also have to think about the economic consequence, not just of having a bank holiday for the funeral, but the weight on the national mood. You've got Deutsche Bank and Nomura now saying that this could push the UK into a technical recession.
All right, Lizzie, thanks very much. Lizzie Burden there telling us all we need to know about the UK this morning amidst many changes. Now, in speeches and rallies across this country over the last 2 weeks, President Biden and Donald Trump have slugged it out as if they're contesting the White House already and not campaigning for congressional elections. Trump has even shadowed Biden's appearances rallying 4 days after the president in Pennsylvania last week and in Ohio next weekend. That'll happen. Anne-Marie Horder, Bloomberg Washington correspondent, joins us from D.C. for more. Anne-Marie?
Yeah, Matt, as you're saying, what you really are seeing now, especially less than 2 months away from those midterm elections, and that is that the President of the United States, as well as the former President Donald Trump, are both out on the campaign trails. What you have from the President of the United States is he is going to make this election about the fact that you should be voting for Democrats because, as you heard him say a number of times, they cannot have the, quote, in his words, ultra MAGA getting these posts. Today, specifically, he's going to point out what his administration has done over the course of the year and a half. Most notably today is going to be about that hard infrastructure agreement they passed last year. That was with the help of Republican votes as well. And this is going to be talking about the revamping of Boston's Logan Airport. He's then going to talk about cancer moonshot later today, really revoking JFK and trying to garner public support to ending cancer as we know it. And then tonight, talking to those individuals at a DNC event. And then tomorrow morning, a big push of this administration, and really, I would almost say the kickoff for the Democrats in terms of campaigning for the midterm elections, is the president is going to host this celebratory event about the Inflation Reduction Act. And all of this comes at the times that the Republicans are trying to figure out what their messaging is really going to be in these final weeks ahead of the midterm elections. It was supposed to be inflation, but now you are seeing pockets of the country, whether it was Kansas or whether it was that swing district in New York, that abortion is actually really a live issue in these midterm elections.
Bloomberg's Anne-Marie Hordern reporting from Washington. We thank you as always. I'd like to take a quick moment and issue a surveillance correction here. I mentioned earlier in our Asia pre-market check that Asia did actually move overnight. It did, but certain parts of the region did not. China, South Korea, and Hong Kong closed for the Mid-Autumn Festival holiday. So that outperformance I mentioned in the Hang Seng Index, that was actually Friday's move. But the concept still holds. Risk sentiment is indeed coming over from Asia and spilling over throughout the rest of the day. Let's see if it holds on the macro basis. On the micro basis, I like to look at some of the stocks moving in pre-market trading, specifically Adobe here, cut to neutral over at Mizuho Securities, a price target of $440. It's trading at about $391 right now, so still a little bit of upside from the Mizuho perspective. Remember, they are also reporting earnings on Thursday. The shares are down about 0.9%. Once again, that is one part of the tech space where you're not seeing that outperformance. But speaking of tech, I want to go to another part of it. Nvidia moving on reports that the Biden administration is planning to broaden curbs on U.S. shipments of semiconductors for artificial intelligence and chip-making tools to China. Here's why that's important. Moving the shares up about 0.9%. Not only, Anna, is Nvidia a heavyweight in the S&P 500, it also creates a little bit more demand for American chips from around the world. And that's going to be a key story as we talk about easing of some of those supply chains. And the last one I want to hit is Riot Blockchain here. Of course, really magnifying the moves you are seeing in Bitcoin at the moment. RIOT is your ticker, up about 5% in the pre-market, Anna.
Chrissy, thanks for that. Let's talk about what's coming up on this program. Shortly, we'll be talking to Gary Shilling, president of Gary Shilling Co, and a Bloomberg Opinion Columnist. We'll get his take on where we are on these markets. Maybe also the strength of the dollar. Where does the strength of the dollar go? Where has it gone? And the world's hottest housing markets are facing a painful reset. Read more of today's Big Take story. Bloomberg.com is the place to go, or by typing NI Big Take into your terminal. We will also have coverage of this story a little bit later on this hour. This is Bloomberg.
Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg Surveillance.
This is a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
If inflation fever is breaking and economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in focus tomorrow on Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. And we're focused in very much on the dollar this morning. Markets seem to be watching what's going on, especially with concern to the euro. But I've got a look at the Bloomberg Dollar Index. It's been on an incredible climb over the last few weeks. And last week, we eclipsed 1310 at an all-time high for this dollar index. But we've come back down to 1290. And the question is this just a blip in an ongoing bull market for the greenback, or is it an actual turnaround? Joining us now with his take is Ven Rom, Bloomberg Markets Live currency and rate strategist. So, Ven, what do you think about the Bloomberg Dollar Index and the strength of the greenback in general?
Morning, Matt. As you said, I think this is a correction in the long-term secular bull run for the dollar. We are nearing a peak for the dollar. But that doesn't mean that we are there yet. There is still some traction for the dollar. Why do I say that? Because real yields, if you look at real rates in the US, they are in the ascendant. And as long as they are in the ascendant, the dollar will find plenty of support, notwithstanding what's going on in the markets today. But we are definitely nearing a top. So maybe 110 to 112 on the DXY index.
And Ben, that seemed to be something that during Friday's session, well, the weakness in the dollar at the moment, during Friday's session and today, seemed to be propelling stocks. You doubt whether that continues, though?
Absolutely, and I think stocks are trying to get ahead of the game here. People are trying to bottom fish and thinking, okay, have we seen the worst? Is the Fed coming to a stop on its rate hiking cycle, and therefore should stocks rally? Now, if you look at any meaningful dividend estimate for the S&P 500 for next year, it's around $60 on the index basket. Now, even assuming a generous, very generous top-up, and assuming that it'll be $75, not $60, and that's a huge bump up, even then, you get a fair value estimate of $3,125 on the S&P. So where are we getting 4,000 from? I mean, the market is smoking something that it shouldn't be smoking, and I don't think we are going to get these levels of sustainable.
OK, we'll launch an inquiry. Ben, thanks very much. Ben Round with Bloomberg Markets Live. Thanks for your thoughts on the markets. For more market analysis, check out MLIV Go on your Bloomberg terminal. This is Bloomberg.
Now, keeping you up to date with news from around the world, here's the first word. Chinese President Xi Jinping will make state visits to Kazakhstan and Uzbekistan this week, his first trip abroad since the start of the pandemic. Beijing says Xi will attend leaders' summits and the Shanghai Cooperation Organization, and Russia said last week that Xi will meet with Russian President Vladimir Putin at the summit as Moscow seeks to bolster ties with Beijing. Sweden's coalition of right-wing parties looks set to secure, a narrow victory in the country's general election. The likely result hinged on the rise of the anti-immigrant party, the Sweden Democrats, which saw the biggest gains to become the nation's second largest political force. With 95% of districts now counted, the opposition bloc has 175 seats in the 349-seat parliament. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Dollar dilemma, the greenback tumbles ahead of key inflation data due this week, while the euro strengthens on the prospect of more outsized interest rate hikes. Gaining ground, Ukraine's forces continued their rapid advance in the Kharkiv region as Russian defenses crumble. And housing pain from Sydney to Stockholm to Seattle. Buyers are pulling back as central banks raise rates at the fastest pace in decades, sending house prices falling. I'm Anna Edwards in London with Matt Miller and Chrissy Gupta in New York. Kailey Leinz is off today. And Matt, sentiment across European equity markets lifting stocks to session highs. How do we look pre-market in the US?
Yeah, it's the same here, and I believe it's a lot to do with weakness in the dollar. Right now, we've seen a little bit of a retreat in the Bloomberg Dollar Index, and as a result, we have futures that are up about 0.6% after finishing well above 4,000. In the cash trade on Friday, we had a positive week last week, and it looks like we're going to head even higher today if this holds. Right now, there are some investors buying the 10-year right now, pushing the yield down about 1.5%. So 329.45 is a level there. Call it 330 on the 10-year. Still relatively high, but it leaves the question, had we peaked at 350 or could we head back there? We'll ask Gary Shilling that question in just a few minutes. Here's the Bloomberg Dollar Index right now down at 1291. We were up over 1310 last week, so it was a record high on, at least according to that measure, and we've seen dollar strength whatever measure you look at. So there's another big question. Do we see now a turnaround in the strength of the dollar? Are other hawkish central banks like the ECB going to gain some for their currencies and push down on the global reserve currency, or is this just a blip? Bitcoin right now up about 2.4%. This makes a lot of sense, obviously. As the dollar comes down, and Bitcoin is usually priced in dollars, it's going to gain. But you're going to see that driving a lot of crypto stocks as well today, as Kriti was showing us. So 22,157 right now, the level for Bitcoin, and we're going to continue to watch that. Kriti, what do you see in pre-market movers?
Yeah, well, let's start with the crypto story because that, of course, is going to be a big one. I'm going to start with Riot Blockchain here. I'm going to move from the bottom up for our TV audience, for our radio audience, up about 4.4% in Riot Blockchain, really following those crypto moves that Matt was just talking about. You also have Nvidia right now moving on reports that the Biden administration was planning to broaden curbs on U.S. shipments of semiconductors for AI and chip-making tools to China. We know that's a move that they've already done as well, but once again, broadening those curbs would create this international demand for U.S. chips and ending that story. I should say Nvidia shares are up 9/10 on that prospect. Ending it, though, with the market check, Adobe cut to neutral over at Mizuho Securities, a price target of $440. What's interesting, though, is they're still forecasting quite a bit of upside because you do have those shares down 0.9% today, but trading at about 391 at the moment. So, Anna, a lot to digest there, especially ahead of their earnings coming up on Thursday.
Yeah, absolutely. Back here in Europe, then, Kriti, European stocks making moves higher, as Matt was just mentioning, near session highs for European stocks. So some gains here to do with the weakness in the dollar, to do with the advances, perhaps, that we're seeing Ukraine make against Russia. The euro benefits from hawkish commentary, as Matt said, from ECB officials. This specifically from Nagel at the ECB. So he of the Bundesbank, 1.0168. So back above the 1 mark on euro dollar, up by 1.25%. That's quite a sizable move for these two massive powerhouse currencies. We have the dollar here in retreat against the Swedish krona. So the Swedish krona gaining with all of the risk appetite that we're seeing, rather than focusing on the domestic policy, because domestically we've seen an election take place, a new government, it seems, will have to be formed, a more right-wing government than we've seen of late, but the market putting aside questions around policy and government formation and focusing instead on the risk-on mood. Natural gas prices retreat, down by 5.6%. Another reason for the risk-on mood here in Europe, down, retreating from that 200 euros per megawatt hour mark that we've been at for a little while. We'll look to Wednesday to get an update from the European Commission on what they plan to do on the energy policy front. Now, let's focus in on what's going on here in the UK. Still in a period of mourning, of course, and happening right now. King Charles III is listening to condolences at Westminster Hall. This comes as the UK continues a period of mourning. During this period, the business of government is paralysed. Even the Bank of England has delayed its September decision. That gives it time to account for the slew of eco data out this week. Let's get back to Buckingham Palace, where we're joined by Bloomberg's Lizzie Burden. Lizzie, business is carrying on, not as usual, but it is carrying on. We will have a public holiday on the day of the funeral, but other things are happening. But some areas, for example, government pausing to pay condolence, of course, to the new king over the loss of his mother. So how is the sombre national mood affecting the economy?
Indeed, Anna, we had the latest GDP figures out this morning, and they showed a 0.2% increase in economic growth in July. But really, it was just a technical upswing from the 0.6% decline that we'd seen in June because of the bank holiday to honour the Queen's Platinum Jubilee. So a sad reminder that only a few months ago we were celebrating 70 years of the Queen on the throne. And it's a warning that when the Queen has her funeral and we're having a national bank holiday, together with the generally sombre national mood, as you say, it could weigh on economic demand. So Nomura and Deutsche Bank have warned that that will tilt us into a technical recession here, although Bloomberg Economics, our in-house economists, say that that recession won't last too long because of the stimulus from Liz Truss's energy bailout. But of course, the worry with that is, while it might temper short-term inflation, the risk is that it overheats the economy, and it means that interest rates from the Bank of England have to stay higher for longer.
All right, very interesting stuff. Lizzie Burden there on Royal Economy Watch for us. Thanks very much. I'm sure we'll be checking in throughout the week, up at least until the funeral on the British royal family. Now, let's return to the U.S. and to markets. Gary Shilling joins us right now, president of A. Gary Shilling and Company. He's a Bloomberg opinion columnist, and before Mike Wilson and Savita Subramanian, Gary Shilling, David Rosenberg, Nouriel Roubini, and David Tice were the big bears. Are they back? Gary, of course I count you as one of the 4 big bears of the great financial crisis. Do we see significant drops from here on out in the market? I mean, we did rise back above 4,000. It looks like the mood has lightened up a little bit. Recession fears are calmer. How do you see the economy and the markets going forward?
Well, the path to recessions, like the path to true loves, is never smooth. But I think we've got a long way to go. And one of the interesting things, Matt, is that we haven't reached what I delicately call the puke point, the point at which investors want to regurgitate their last stock and never own another one. You haven't seen that capitulation. And with a recession likely to stretch into next year, it seems to me that there's a lot of downside. Yeah, you've knocked some of the fluff off the market, but earnings weakness is really yet to come.
How much downside in terms of, let's say, the S&P, and what kind of earnings do you expect?
Well, I think that we'll see from the peak we saw in early January a total of 40% decline. Now, that would be about a 30% from here because we were down 20, then you rallied. Of course, these numbers, you know, they up and down, they're not always exactly the same. But I think we've got a lot further to go on the downside. And earnings, I think earnings are going to be very disappointing because, and particularly when you look at them in real terms, that's what a lot of people are just not doing. And that was a big lesson of the late 60s and 70s. It was a real economy that counted, and the real economy is really very weak. You have this overlay of inflation.
Yep. Anna?
Gary, good morning. It's Anna in London. So talking about the earnings story deteriorating, we have faced, up until the last couple of days, a really strong dollar. And some companies were mentioning that last earnings season. Is that going to be something that you're watching out for, the damage caused by the strong dollar?
Yeah, I think so. I think we've got a lot of earnings weakness. And, you know, again, one of the issues is the dollar. The dollar's strength means that the earnings of U.S. companies, their multinational earnings are worth a lot less. So that's another factor. And you've got about half the S&P earnings are exposed to the rest of the world.
And what do we make of plans to cap all kinds of energy prices, Gary, whether we're talking about oil, the G7, or gas here in Europe? Lots of talk about capping prices. With your years of experience, what do you make of those kinds of conversations? What would that typically do to assets?
Well, I think the energy situation is very much in the hands of OPEC Plus, and you don't know what's going to happen there, and with Europe, Ukraine war, and so on and so forth. But it looks like Russia is very definitely using energy as a political weapon, and they're trying to squeeze Europe. I mean, obviously, this is it's a new form of Cold War, and it's a proxy war too. It's got all these elements that we've seen in the entire period from since World War II, fighting in proxy wars and doing it with other people.
Well, Gary, speaking of the Cold War specifically, I'm a little bit of a history nerd, so bear with me. Back in 1962, we saw a very similar dynamic where you had a lot of gains in the S&P 500 at the time, driven by those growth stocks, only for it to be followed by 9 months of declines. The pivot point, though, was the end of the Cuban Missile Crisis, and I'm wondering if that is a history lesson that can be applied to today. Over the weekend, we heard about Ukraine taking back some more or reclaiming some more of the territory that the Russians had taken over. Is the end of that conflict perhaps the pivot point for stocks globally?
Well, if it ended, it certainly would be a big sign of relief. But bear in mind that during the Cuban Missile Crisis, we didn't have a weak economy. We didn't have a recession. We didn't have a Fed that was bound to kill inflation and in the process create a recession. And they virtually told us that. So I think that, yes, there is a relief if you don't have as much in the way of shooting wars and possible escalation. Well, I think it's a very different environment.
Gary, a final quick one for you. Your price target and what time we'll get there by?
Well, again, you're talking about the S&P?
I am, yes.
Yeah, again, as I mentioned earlier, I think we'll see from the peak, which I think was January 3rd, we see a total of 40% decline. And that's not unusual for a recession. So I think this is, there's nothing here like the big problem with subprime mortgages to really kill things. But you certainly have imbalances. Housing is one of them. All the speculation that's created by the money coming from the Fed, from the federal government in terms of fiscal policy. We had the rounds, the anti-virus payments. I think there's been a lot of speculation out there, and that's what really needs to get wiped out.
Okay, and we'll talk about housing later this hour. Gary, thank you so much for joining us. Gary Shilling of Bloomberg Opinion and, of course, of Gary Shilling & Co. Coming up on the programme, Bitcoin gaining today as investors await US inflation data and Ethereum's upgrade. That conversation next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kriti Gupta in New York and Anna Edwards in London. Kailey Leinz is off today. Now, Bitcoin is gaining as investors await U.S. inflation data and monitor a seminal upgrade of the Ethereum blockchain, although that looks to have little to do with Bitcoin and should have more to do with Ethereum. I think the weaker dollar has a heck of a lot to do with the rise in Bitcoin, the Bitcoin price as well, since those two seem to work at odds. Emily Nicole, Bloomberg crypto reporter, joins us now for more. Let me start with the merge, as it's called. It's this switch from proof of work to proof of stake, and I guess I thought it would drive the price of Ether up, but it doesn't seem to be happening. Is it really affecting Bitcoin?
I think it's definitely having an all-around effect on crypto markets. I mean, it's such a major change, especially for the second largest token in the crypto market itself. And so therefore, any slight thing that could go wrong with that upgrade, any delays that could happen, that'll knock sentiment across the board. And so, yes, Matt, you're right. Bitcoin is quite tied to the S&P 500, for example, and, the strength of the dollar. It is also going to get that kind of wind from other things happening in crypto as well. It's still a cryptocurrency after all.
Okay, so how do you work out what's driving crypto at this point then, Emily? If you've got the merge going on, you've also got the dollar moves, and you've got other momentum in risk assets, ongoing hawkishness from the Fed, what's in the driving seat?
If we listen to analysts, and we often do at Bloomberg, obviously, they are mainly pointing to the merge as one of the biggest drivers at the minute. But there's also, the ongoing macroeconomic environment. So as you noted, we have the CPI data coming this week. That's definitely hurting Bitcoin more than it might do usually. It had a really big rally at the end of last week, but today it's kind of cooled off a little bit, still in the green, but it's definitely not the 10% spike we saw on Friday. And if you look elsewhere, if we think about how the merge plays into all of this, even Ether, for example, Bitcoin's up today, but Ether is largely flat. And that's because a lot of people are waiting to see what will happen with the merge. The key date to watch is September 15th. That's on Thursday. That's kind of been pointed to as a time when the merge might start seeming a little bit more cemented and confirmed. And so because of that, Ether spot buying relative to Bitcoin has been relatively low in the last few weeks.
Well, you walked us through the details of the merge. Walk us through the details of anything else you might be watching within the Ether space.
Yeah, so as I mentioned, we're definitely watching how Ether is performing in spot markets compared to in the futures market. So, for example, if we look at data that we see from Kailey, which is a blockchain analytics firm, they pointed to the fact that relative to Bitcoin, weekly spot buying for Ether was at its lowest point in over a year last week. Whereas, interest in open futures, that has all been spiking a lot. In the last few months, and that's because people are waiting and seeing. They're wanting to know what might happen to Ether in the last few weeks. We've also got the issue of, people have been locking their Ether up in staked positions, waiting for this merge to complete. And as those positions start to unwind when the upgrade process goes through, that'll cause some changes as well.
Emily, thanks very much. Bloomberg's Emily Nicole with what's going on in the crypto space. And be sure to watch Bloomberg Crypto. That is every Tuesday, tomorrow then at 1 p.m. New York time with Matt Miller and Kailey Leinz. This is Bloomberg.
we can't sustain double-digit house price inflation. So if higher mortgage rates bring a bit more realism into the housing market and put a dampener on house price increases, that's not necessarily a bad thing. And it actually makes it easier for first-time buyers to get on the housing ladder.
That's Andrew Sentence, of course, Senior Advisor for Cambridge Econometrics and former Bank of England policymaker, speaking about the UK housing market. Let's broaden that conversation from the UK to the global housing market. The world's hottest housing markets are facing a painful reset, with frothy property markets poised for double-digit price declines. That's as soaring borrowing costs squeeze home buyers and property owners alike. For more on our latest Big Take story, we're joined by Neil Callanan, our London Bureau Chief. Neil, we heard there Andrew Sentence talking about the UK dynamic of this, but this is a global story that you've been writing about, driven by higher global rates.
Absolutely. So a lot of the property markets that boomed during the pandemic, as central banks cut interest rates, are now facing the consequences of that. As interest rates rise due to higher inflation, those bubbly property markets, which range from Australia to New Zealand to China to the UK to Canada, are all starting to see downturns. The UK market is a bit different at the moment, double-digit inflation in terms of house prices, but what you're seeing at the moment is the market actually 4 months ago or 5 months ago, because those transactions are only coming through now. The situation on the ground is much slower than the headline figures would suggest.
Now, you mentioned a number of countries, but you leave out the world's biggest economy, Neil. Is the fact that the U.S. home buyers mostly use fixed-rate 30-year mortgages going to kind of save the U.S. housing market, at least relative to what we're seeing elsewhere?
Yeah, I'd be cautious about the soft landing theory, which everybody tends to say at this stage in the cycle. There are very, very few soft landings that happen in the real estate market. But on the other side, you don't see the same level of overbuilding that perhaps you did see before the financial crisis. So the US will probably begin to see an impact in the housing market, particularly the new homes market, in the next 6 months, but maybe won't see the kind of level of price falls that you will see in some of the other markets where their economies were already booming and lower interest rates fueled a property bubble that maybe the US didn't see because the economy was growing at a rate and house prices didn't grow at the same rates as elsewhere.
Neil, very quickly, we're talking about historical precedents here. The buildup in the housing market you saw in 05 and 06, any lessons we can learn to this time around?
Yeah, I think governments will get involved earlier. That will be one of the main things if the housing market does pop. One of the things to remember, though, is the level of increases means that actually even with a 20% fall in most housing markets, you're only back to prices 3 years ago. I think the nearest analogy is probably at the moment to the 1990s, where inflation rose very, very quickly and property prices went down. And I think you're going to see probably a longer, slower recovery from the housing market this time than there was after the financial crisis.
All right, Neil, thanks so much for joining us. Bloomberg's Neil Callanan there, London Bureau Chief, talking to us about today's Big Take. You can see that story by typing NI Big Take on your terminal, or you can see it, of course, on the web at Bloomberg.com. Now let's get to what else we're watching. You may have seen Danny Berger kind of photo-bombing Neil there in the shot. I was listening to her radio show with Stephen Carroll today, or rather Stephen Carroll's radio with Danny Berger, and Leonid Brzezinski was talking about the advance that Ukraine has seen against Russia. In fact, they've taken back Kharkiv, and Brzezinski told us that he thinks they've taken about 3,000 square miles back from the Russian troops. Sounds like a huge advance. Now, there are another 125,000 square miles there, or I believe it's actually measured in kilometers. So they have a long way to go, but it does look like there's been a real progress, real advance in Ukraine by the Ukrainian troops, and maybe they could win this war. So I'm keeping a close eye on that. Critty?
Well, let's talk about the ripple effects of that. It has to be, of course, when it comes to the global food outlook, and that's really what I'm watching. You have a WASDE crop report coming out at noon New York time today. This is going to be crucial in terms of just how prepared is the global economy and the United States, by the way, for a prolonged conflict, if indeed there is one, especially as we have Ukraine and Russia making up over a quarter of the world's grain supply. Once again, how much room do we really have in storage, Anna?
Yeah, Russia talking about the need to amend that agreement on grain. Just those lines coming in the last half hour or so. I'm here in London, of course, and the national conversation still dominated by the mourning of Queen Elizabeth II. The final procession of Queen Elizabeth II continues today. The King will fly to Edinburgh a little bit later on today. The Queen's coffin goes from Holyrood House Palace to St Giles Cathedral later on in the week, coming to London. More surveillance is ahead. This is Bloomberg.